kind of thing. Like there's a small wave and there's a big wave, you know, so that's a wave. It's not that complicated. Here's most probably a good example. There's one wave and two waves. And there's an example, one wave and two waves. So, but I like them to be like that, the fully formed ones. They really do give, that is a really good signal there, fully formed waves. Okay, so let's focus on today, because we can't focus on too much. We must focus on what we've got. So we've got the USD franc and the Aussie Yen. So let's start looking at the USD. Remember, the next step is to look at the relative strength charts of every currency that we're going to trade. So now the USD is, because we trade, the US franc has come out as a possible trade, we're now going to look at the relative strength of the USD, the dollar. And how do we get the relative strength of the dollar? I just list all the currencies that have the US dollar in the cross. So some will have it as the base currency and other one as the reference currency or the quoted currency. Okay, so let's continue with this. Now, all I'm going to do now is I'm going to do the same exercise. I'm just going to look at the RSIs to see if I can find anything interesting on the RSIs. Nothing really standing out. There's no signal that we've missed. The one we have identified is the USD franc. That is on the daily chart. Now, this analysis I only do on the 4-hour chart. I find the 4-hour chart is good enough to do this kind of analysis. The reason why we're not getting many trades is that we've missed most of the trades. You can see the markets are trending like crazy. We should have been in those trends already. This system gets you in the beginning. It doesn't get you in when the market's traded. So there's nothing that's come out of studying the USD charts. So what we'll do, so the next is to study the relative strength of the franc. I don't really like the franc much, but all right. So let's have a look. That RSI. Oh, so this one looks. This is the CAD franc. Oh no, that didn't go overboard. So that had to be overbought to qualify as a potential trade there. That's also nothing there, nothing there. The market's not very good, but it literally can change within an hour or two. The whole market can change. You see, like this one's building up for a really nice signal. The waves aren't very big, but if it comes down there, it will have made 2 or 3 nice waves. So that would be, oh, here's one, the New Zealand franc. This is nice. That trend line is too steep. You don't want a trend line as steep as that. It's a little bit too steep. I might come back to this one. I just remember New Zealand franc. That is a potential trade there. You see 2 nice waves, trend line, overbought, oversold. Pretty good signal that. All right, so let's just go back to our, so we've done the USD and we've done the franc. Now we're going to go and do the Oz and then the yen next. And there was a potential, this is a potential, but we'll come back to this one. We're going to do the Oz, relative strength. I think there'll be a few signals here. There was one there. 2 waves. Looks like that's gone oversold. No, it hasn't. So that's, but it's also close enough. So there was a signal that hasn't really worked out. I'm going to leave that one. That one is too new. You see that this currency is not too bad, Aussie. This one's got no oversolds. That one was a trade earlier this week. This one hasn't gone oversold or overbought for a while, so we stay away from that. This one, no, they haven't actually gone overboard, so I'll stay away from that one. And this one is a very weird one, very weird. It's a very strange entry. There, the 2 waves, boom, 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 and it actually did work quite well. But okay, so nothing that come out or doing the Oz. Now let's see if the yen produces something. the relative strength of the yen. All right, so look at these trends. They're just amazing, amazing trends. Look how badly the pound yen has been trading. It's one of the most volatile currencies, and it's just been trading sideways, and it's only now breaking out of that movement. All right, so let's have a look if there's anything. There's nothing there, nothing there. Oh, there was something here earlier, CAD yen, and no, we can't really take any of it. It's too late. That's almost over. Okay, and that, oops, close. There's a potential trade. It's not ready yet. Maybe the next time I look at the charts, that will be a trade. This one, no, you can see there's no. So look, at the moment there really are very few setups, and that's good. It basically means I can play more golf in the next few hours and that type of thing. So it's actually a good thing. It's a way of keeping you away from the market if you're not picking up any trades. All right, so that hasn't brought any new information except that one, but I don't think I'll go for that. So before we go into the detailed analysis of the two that we've picked up, I'm just going to try and read through any questions or comments that have come in. How many signals can you get on a daily or week? This is the whole point of this. When the market's bad, you're going to get no signals. When the market's good, you're going to get 20 signals. That's how the system works. So you cannot budget by day or by week or whatever. It's how the market. You can't force yourself in the market. So the market tells you, I'm ready to be traded. And at what it's saying to us now, I'm not ready to be traded. That's basically, so don't plan too much. You can't budget, every day I'm going to make a trade and I'm going to double my account. You just trade when the market's right. Thanks for that question. Do you want the candle to close before entering it? No. We're not looking at entry signals now. We're looking at qualifying currencies. Just be very careful. You must get your concepts right. We're not looking for entry signals. We're looking for qualifying currencies. Currencies that have gone overbought, oversold, have a trend line violation, and have good waves underneath them and have a divergence. Those are what I call qualifying currencies. They might look like entries, but they're not entries. They qualify. For a currency to qualify, does it have to qualify on both a day? No, it can qualify on any. In fact, sometimes on the short list, I get a buy on one and a sell on the other, and there's nothing wrong with that. You evaluate both of those options. So I think everybody's quite keen, and I can sense this need to have rules for entries and exits and things like that. You'll find the next process is going to be very frustrating. So because we're going to now take this short list that we have, and we have not added anything, we're now going to analyze it in detail. So let's go and do that. And I'll go and the first one I'm going to do is the Aussie Yen. So we go to the Aussie Yen, and you open that up and see what we've got. And this is what we've got. So essentially, this is my analysis chart. These are my analysis charts. So I have a weekly RSI, a daily RSI, a 4-hour RSI, and a 1-hour RSI. Then I have channel trading charts, which I can flip from daily to 4-hour, and then I also have multiple moving average charts, which I can flip from 4-hour to daily, so or wherever I want to. So that's really my analysis setup. And when I start using these charts, I use every bit of analysis technique that you can think of. I look at candlesticks, I look at support and resistance, I look at non-horizontal support, I look at channels, I look at multiple moving averages, just a lot of things I look at on these particular charts. Do you have a course written? No, this is the course. So, you know, ask any questions that you have. This is the course. It's a live course. It's not, I don't teach this. I can't teach it because if I go onto this, you'll see there's just too much. You need to be a complete trader to be able to analyze all of this stuff. But yes, there are courses. We have a number of them. You'll just have to ask Mary about those courses, but the long candle is one, the Watto courses are others. We've got lots of free courses. Let me just see if I can find some free courses. here we have a course which is freely downloadable, which covers all the entry techniques that I use in this system. I use all the entries from there, all the turning point things here. I use the stop principles that I mentioned in this course. I use the money management principles in this course. I use the time principles in the course. So everything I know has gone into these courses. And very few people read them because they've got the name Simple and Easy, but I was just trying to say it is simple and easy if you know what you're doing. But so there you are. Just go to the forum, download these courses, and you'll have all the knowledge you want, and it's free. A lot of these things are subjective and soft, and you'll see now when we go here, we're going to get 20 buy signals and 20 sell signals, and you're going to have to decide which one you believe. All right, so the first thing when I go here is I look at the signal that we, now clearly this is something I've been watching, so here's the signal that we identified as the signal that has brought our attention to this currency. So there's the signal, and now what I'm looking for now are signals to confirm a buy. That's what I'm looking for. So I can start on the weekly charts. So the weekly charts, the RSI's hooked very sharply. That's another signal on the RSI. If it hooks very sharply, it means that it's likely to change direction, and it's pointing up. So that's a buy confirmation to a certain degree. Although the channel trading is arguing that it's still got a bit of a way to go before it bounces. All right, so there's one confirmation. That one is a confirmation. This one, let's have a look if this one confirms. All right, so we want to buy, and what this is saying, hey mate, you buying into against the trend. There's the trend, and you actually want to buy against the trend. Are you sure you want to do this? Shouldn't you wait until it reaches that line and then sell it? That would be with the trend. So a little bit of an argument that we shouldn't be buying there. And the 1 hour I very seldom look at it. I just look at it if I need refinement for an entry. I won't look at that any further. Now, all right, so here we have the multiple moving averages, and all I'm looking for is the direction of these lines. They're all pointing up. Now, when they're all pointing up, I've lost my audience. Okay, well done, Mick. When they're all pointing up, it says there is a trend underway. You can see it's like the crocodile indicator that there's a big distance between them. They are all pointing upwards, so there's a strong trend going. There's no evidence of, so this is supporting the buy. That's supporting the buy. So we've got some support for the buy there. Let's just change this to the daily and see if we can see. All right, and there's another support for the buy. There was a hang of a strong trend there. It then consolidated, and now the fast moving average is crossing the slow moving average. That's basically a buy signal. Okay, now on the channel trading basis, now sometimes this thing doesn't draw the channels very well, and then I just override it, but that's close enough. 1, 2, 3. It's breaking out of a channel. That's a buy signal. When it breaks out of a channel like that, it's a buy signal. What's happened here? It's bounced here. 1, 2, 3, bounced again, and made a false swing, or a failed swing. Channel trading is the most simple technique. There's only 2 rules to it. If it makes a failed swing, it will break out, and that's the direction of trading. So channel trading is saying buy. That's saying buy. That's saying buy, and in fact we should be buying right now. The rest are saying, oh, are you sure? Maybe that's saying buy, although it says maybe it's a little bit too early. That's all right. So we have a potential buy here. So we have a potential buy. So what are we going to do? Now the first thing to do is start to develop a trade. So to develop a trade, you need to have an idea of the support and resistance levels. So I just want to see the distances here. Right. So we've got a potential of 160. Can move that one down a little bit to that level there. So we've got 130 potential there, and we've got a stop here of about 90. So that's not a bad transaction. It has to break through some resistance up there. It is already overcooked. Just need to be careful of that. It's already overbought, but that's not a reason not to buy. And because it's I'm still an early buy. That's what it's saying. Yeah, because we've got that. So this is all right. So this is the trade of the day. Let's have a look at the franc. But so far, I think that's definitely the trade of the day. Sorry, the screens are giving me a bit of a trouble here. So the franc. Now, why I'm worried about the franc is you should actually get the same signal on the euro, and then I'm not getting the same signal on the euro. So the franc's starting to act on its own, and that's sometimes a worry. And we're looking at a buy on the daily for the franc. So let's go to the daily. Here it is. It's virtually the same currency, the same setup. We have that kind of thing. See lots of waves. They don't have to be pretty, but lots of waves. This one, in fact, has crossed on the 50, which is a super strong signal. What it also has is a nice divergence. So this again is also a very nice strong signal. So let's have a look at the weekly. The weekly has got that hook that I mentioned earlier, and it's pointing up. So that's pretty good. That's like a reversal candle formation. These are very similar. All right, so the franc from a channel point of view is going to reach there and go down there. That's what it's saying. And the 4 hours basically saying exactly that. It's come down there, changed direction. It's consolidating to a large degree there. It could go down. On the channel, you can see here that it's actually saying this is a point at which it might start going down. All right, I think I've seen enough. Look, we've got the same signals on the other one as this one, but I've seen enough to disqualify the franc. I just see, I would rather wait for a couple of hours and trade that trade, that one down there. And the RSI will give me that trade. There's the overbought, there's the oversold, there's the divergence. So it's setting up for that trade. I would rather wait a bit, and that will be a really good trade. That one down, going like that. Even here, although that looks like a good signal, the potential might not be as strong. It might just go up to there and shoot down there. So I'm not convinced that this is a good trade. All right, so let's go to the other one, which is the Aussie Yen. I think the Aussie Yen is basically, I can disqualify on the same basis. Let's see. Now this one looks a little bit more of a buy than the franc is, because you can see the channel is actually flattened out here and is starting, it's like a double bottom wall. It's more of a reversal formation happening here. It's not quite a double bottom, but it's pretty good. A lot of divergences all over. That one is hooking up. That's a rejection spike. What it is saying is that on the 1 hour, it's saying it's too early. You've got to wait for this cycle to finish. Let it go down and then buy. That's what the hour is telling us. But that's why we have stops. So let's see. Let's design a trade here. What's nice about this is really it needs about a 75 pip stop and 130 pip target. Can possibly go up to there. I'll just see if I can get away with this one. Might be able to get away with a 90 pip target and a 80 pip stop. I might be able to get away with that. I'll just have to have a look. All right, so the time has come now to make a decision on whether to trade. I'm going to trade with this Aussie Yen trade. It's not the greatest trade. It's already overbought on the 4 hour, but there is enough momentum. I think that momentum is pretty strong momentum to push it, and those breakouts are pretty good, are good enough for me. What worries me is there are short-term signals that actually say that it might go the other way for a short while. Even there, it's saying it might go a little bit lower and then bounce. So there are signals, but this is where I'm saying you're going to see contrary signals and you're going to see force signals. And in the end, there's nothing. You cannot make a perfect trading decision. You're going to have to decide 60-40 for a buy or 70-30 for a buy. There's always going to be sell signals and buy signals presenting themselves at the same time. Like here, we've got that's a sell signal. Boom, boom. That's no question about it. The only thing is that that's very steep. It's too early for a strong sell signal on that one. So, and it's also far from the 50 line. You can see that's far. So the validity of that signal might not be as strong as it should be. But and it has broken through resistance. It has broken through. Yeah. So it's just going to test the resistance and then go. All right. So let's have a look. So we're going to trade the Aussie Yen. So the next step is to develop a trade that will double your account. I've just lost the questions. I hope there they are. All right. There's so much going on here. I just want to see if anything else. Sometimes I will. The question is, do you use market orders or pending orders? Sometimes I will use pending orders in for my own trading. For instance. A year, I might put a pending order and say I want that high taken out before because this is a sell signal. So you want so ideally this trade should have a pending order above the previous high to make sure that you're not going to be caught by this signal. So here's a case where I would ideally use a pending order for this particular trade, but now today I'm not going to. I have to put a trade on. So let's do that. So I'm going to use a market order. Oh yeah, there's the same questions came through. All right, there's a question about channel trading. I don't want to go into channel trading too carefully, too much. The only time you cater for a breakout from a channel, and I've already mentioned that, is if you have a failed swing. There's the answer. Otherwise, assume that the channel is going to bounce and bounce and bounce and bounce. The only thing that will make it down is a failed swing. Hope that answers you. How often can you, as many times as you want? Trend is moving up. All right, okay. All right, so let's get into the next section, which is calculating. All right, so we've got the Aussie Yen. I'm going to just go to the next. Now I've got the maximum lot calculation. Now maximum lot calculation basically says that how much. What is the biggest amount of lots that you can trade on this particular deal? And in order to do that, you need to know the stop size, and I think the stop size was 80. Let's just double check. $75. So the stop size is 75, and the target I think was 90. I'll just double check that. So from there to about, oh, I could say 100. let's say 100. Okay, so we're going to go for 75 pip stop as 100 pip target. The pip value, now anybody know the pip value of the Aussie Yen? And so okay, let's have a look. I hope the sound is coming back. Okay, there it is. All right, so the margin we've just established is 1.89. So for a main lot, it will be that much. So what we've established is how much finance do you need to finance one lot of trading. So you need $856 to finance one main lot. Now my balance on my account, as you can see here, is 10,000. So I'm just going to put in 10,000 in there, and then it's going to, by taking what you need for a main lot and dividing that by the balance that you have, it says the maximum amount of lots that you can trade is 11.67. Now if you trade 11.67 and you have a 100 pip target, it means 100 pip at that pip value times those many lots will give you $10,391, which doubles your account. Now, I hope everybody's followed me on that one, because that might be something that you want to take a screenshot of and replicate this on your own Excel spreadsheets. But that's the way it works. I'm just going to go through this one more time, give you an idea. What we want to do is we want to calculate what it will cost us to finance one lot of trading. So we're going for 75 pip stop. We have to have $667 of money in our account to finance a 75 stop at that value. We also need to finance the margin that the broker is going to charge us, and therefore we are going to need that in total. The balance in our account is so much, so that means we can trade 11.767 lots. We're going for 100 per target. At that per value times that will give, if it's successful, it will give me 10,300. In fact, let's just see if I can go smaller on this. No, I'll stick to 100. All right, so there is our calculation. We can use 11.67 lots, and we can trade a 75 pip stop and a 100 pip target. So let's put the deal on. Okay, so yeah, this thing is going to come down in the short term, but that's fine. We'll put the deal on. So away we go. What was the number? It was 11.67. And we've got to go for a target of 100. So the target has to be 86 point. I'm just going to go for 10. I'm not going to go for a stop because we'll have a margin call and that will stop the transaction out. Okay, and then everything seems fine. Everything seems fine. And we hit buy. Okay, so there's our transaction. Let's see how that goes. If we are successful, we will double the account. If we're unsuccessful, the question came in, you'll wipe the whole account. No, you won't. Just think about it very carefully. That margin that you put down, you see that margin doesn't belong to the broker. It's your margin that you're putting down on the deal. So you will get 11.67 times the margin that you've put down, which is 2,200. You will get back if you have a margin call. Now, a lot of people don't realize that you actually get your margin back when you have a margin call. So the broker will return to your account $2,006. So let's work out the risk. I've got an 80% success rate. 80 times 100% is 800%. And then I've got a 20% failure times 8,000. So let's rather do it this. Oh gosh, no, it doesn't like it. Right. just go 2, simplify it. 8 times 10,000. 8 times 10,000 is that, so it's 80,000, and your loss will be 8,000. So I hope I'm doing this right. It's actually minus 8,000. So if I do this type of deal, I should still be in profit. Okay, there we are. So I'm still in. All right. So let's see. What if you have 7 wrong and 7 right and 3 wrong? You're still making a whack of profit. What if you have 6 wrong and you have 6 right and 4 wrong? You're still making a profit. So the odds of this transaction, the odds on this kind of transaction is actually a lot better than people think. Risking 80% of your account to make 100% doesn't seem viable. I've just, David, just check my calculations here. If you trade 10 times and you're successful 6 times, you'll earn 60,000. The 4 times that you're unsuccessful, you're going to lose 32,000, and you are still going to make it. Is that right? Do you agree with that, David? All right, let's try another number. What if you have a 50% success rate? You're still profitable. What if you have a 40% success rate? It's only at that point that you start losing. So let's just think. Just think about it. Webinar, I actually did a live trade. It's a live account, doubling my account using this methodology. You know, and the only way to you keep this on a live account if you've done your sums. Now, if this was unsuccessful, I'll just take the balance on this account, transfer to another one, and start again. So because the odds are really very much in my favor, because I've done a really good work, a good job to select the currency. So if the first, so I don't only have 5,000 to trade with. I've got lots of money to trade with. So you don't risk all your money. You risk 10% or 5% of your money this way. You never trade all your money this way. So if you've got, let's say, a 10,000 to trade, then you say, all right, I'm going to divide it between 10 accounts, and I'm going to trade 10 accounts this way, $1,000 each. You know, you just got to think these things through. You don't think at the worst. Think these things. Look at the odds. Work your odds out. Are the odds in your favor? All that kind of thing. All right. So sorry, I've gone right over the time, and it looks like I've answered most of the questions. All right. So now this spreadsheet is the kind of thing you should take a photo of and play around with the numbers, but in the end, let's just summarize what I've done. I have done a filtering system that makes sure that I actually trade the best trade there is at the time that I'm doing this process. And in fact, the trade that I traded there isn't the best trade. I should have been trading it. I should have traded with a pending order and that type of thing. But for the sake of webinar, I'm trading it as a market order. And let's see what the results are, because I believe the push on the daily is pretty strong. Look at that. It's a pretty strong push, and that's almost a double bottom, and it's a very big divergence. That's enough evidence for me to say I'll go with that trade. But I have looked at all the other things. I have recorded this session this time. I will publish it on YouTube. If you do have any questions, ask the questions on YouTube. I'll answer them there, or send me emails. I'm happy to answer about that. But thank you very much again for your attendance. Watch out for the recording, and I hope I've given you some ideas to think about for the future. There are some other videos on this method. I called it the leisure method. If you look back about a month or so, I did do a full video on this. I will also be doing a video on this particular deal that I did literally a few hours ago, this deal. I'll do a video, and it will also show exactly how I analyzed this one and found that entry. And look at that, it just made it to the target, and it's busy reversing right now. So cheerio everybody, and good Forex trading.